In this video, I'll show you my $703,000 investment portfolio. What's up guys, Sean here. Welcome back to my channel where I talk about self-publishing, building passive income streams, and sometimes personal finance topics. So if you're interested in those kind of topics, then please leave a like, subscribe, and turn on the notification bell so you don't miss out on any future videos. So today I will be doing one of those revealing my portfolio video that I do once in a while. Now these videos typically don't really get a lot of views because most of my videos are about self-publishing. So when I do talk about stocks and investments, it gets like 1/4 of the views. But to be honest, I like to switch things up once in a while. I do enjoy talking about personal finance topics. I wish I can talk about it more in the future. And also some people do enjoy these videos. So I did wanted to make another one because I did make a lot more investments since the last video. Again, a quick disclaimer is this is not financial advice. It's just for entertainment purpose only. And I don't make these videos to really flex or anything like that. I just think it's important to be transparent about how much I'm making and how much I'm investing. Just because the position that I'm in on YouTube, kind of as a guru, right, is that I think it's important to be transparent because anybody can make videos online. That doesn't mean that all of them has the information that you should follow, right? Because if you're trying to learn more about personal finance and investments, you want to learn it from someone who's doing it successfully. You want to learn it from someone who's walking the talk. And the thing is, on YouTube, there's a lot of people who's not walking the talk, making videos and teaching people what to do. So that is why I just like to be transparent in that sense. So this is just going to be an update video from the video that I made 3 months ago on my investment portfolio. At that time, it was $361,000 total. So in 3 months, I've invested pretty heavily into the market. Most of the money was coming from my business sale that I made. So I sold my business, got a good chunk of cash. So I'm just rapidly putting into the investment portfolio that I have. So I'm just going to go through the small ones real quick. First is Robinhood. So this is my Robinhood portfolio. I have $1,429. Nothing really changed from the last video. I just bought these during COVID time. Pretty much I bought these cruise lines kind of as a gamble. I just wanted to play with it and never really sold. So I'm just holding it, and maybe in a year or two, it's going to pick up much better. Maybe it's going to take a couple years based on what I'm seeing here, but it's much slower than I thought, but it's okay because I really only played with $1,000 of my portfolio. And the next one is Acorns. So Acorns is what I actually started with. I don't really recommend you guys to use Acorns because they have a $1 subscription fee, which can eat up into your profits. Every other app that I'm going to show you is free. I do recommend M1 Finance, which most of my money is in there anyways. But Acorns, I have a moderately aggressive portfolio. So I just put my money in and then they invest for me. And over the years, I made 32% gain. I have $7,587 in my Acorns portfolio. The next one is my Roth individual 401k. This is a 401k that you can open up only if you have an S Corp. So that's another benefit of having an S Corp, is because you can open up another retirement account like this, and you can put in a lot of money. So with a 401k, you can put $19.5 thousand, so $19,500 a year into this account. And that's going to be a tax-free income or a tax-free contribution if you select the 401k option. Or in my case, I chose to do a Roth individual 401k. So a Roth means that I'm putting post-tax money, so money that I paid taxes on already. However, when I take the money out in the future, that's going to be tax-free. Okay, so I pay tax now and I don't pay tax in the future. With a normal 401k, I don't pay tax now when I put it in, but I pay tax in the future when I take it out. Both of these are retirement accounts. So I believe you can only take out money once you hit 59.5 years old. I think that's the age. Don't quote me on it though. But if you're choosing which one to go, if you're more closer to retirement, then you should probably do the normal 401k option. But if you have more time in the market, meaning if you're younger like me, right, and you have a lot of time until retirement, you cannot take out the money anyways. These money that you have in this retirement account, the stock's value is going to increase significantly. So me personally, I'd rather not pay taxes on the money that my investment grew to for over 30 years, which is going to be significantly higher than the money that I'm putting in right now, if that makes sense. So as an example, I don't know exactly how much it's going to grow, but say you put in 10K, right? And that grew to like 100K in the future by the time you're retiring. With a Roth, you don't have to pay taxes on the 100K because you paid taxes on the 10K that you put in already. So I rather save on the 100K than a 10K. And that is why I chose Roth individual 401K. Okay. So in terms of what I'm spending or what I'm investing here, I have some Apple, ARK Invest. ARK Invest, basically, I just bought it because a friend told me to. And now you see it's dropping 50%. So definitely do your research rather than just trusting somebody else telling you what's good to buy. Facebook did well and then it dropped again, but I do think they will come up. JP Morgan is pretty solid, although it's in the red right now, but a lot of stocks is in the red just because as I'm filming this, stocks are super volatile. It did drop pretty significantly in the recent couple months. So SPHD is the only dividend focused index funds that I have. Is doing pretty good, 40% gain. VOO, VOOG, and VTI, they're very, very similar. These are all Vanguard index funds covering the stock market. VOOG is focused more on the growth companies. VOO is the S&P 500, and VTI covers around 3,800 companies, I think. So it's way more diverse. And as you can see here, VOO did the best, but I do think most of the return difference comes from the timing. Okay, so when I invested. Overall, I don't really see a huge difference in terms of the returns. So my plan, I usually just stick to VTI. That's the most diversified, and it seems the most steady. VXUS is the international stocks. And right now with the war and everything that's happening, international stocks or international index fund for me is not doing so well. So total, I have $62,000 invested in my Roth individual 401k. The next one is my normal Roth account. So this is something that anybody can put $6,000 a year into. If you make more than $125,000 a year, I think, is when you cannot invest in your Roth account. However, you can do this thing called a backdoor Roth conversion or something like that, and basically you still can invest in your Roth account even though you make more than 120,000. So that's what I do. But basically I have $30,599 invested. All of my money is in VTI, so same thing, and I just stick to that, and so far the returns are pretty good. All right, so this is the last one when it comes to stocks, and this is the biggest one. So most of my money is invested into M1 Finance. This is the app that I recommend you guys use. It's just the best interface, the easiest in my opinion. I do like the Pi feature too. But basically M1 Finance, I have $310,000 invested. The gain is, I basically lost 6% just because right now, again, the market is, kind of down. But I have the 3-fund portfolio. It's actually 4 funds now because I added Vanguard Information Technology, which is just index funds covering most of the tech stocks because tech stocks dropped significantly. So I wanted to buy into that. And since I bought it, it dropped even more, but I do think it's going to go up in the future. As you can see, most of the money is in VTI. So that's the stock that I always buy. And I do have some real estate ETFs, so real estate index. That's the only one that's doing pretty good. But again, these things, it's all up and down. You're not really day trading. You're not buying and selling frequently. I literally just buy and hold for years and years and years. And when you do that, it's very hard to lose money. Again, this is not financial advice. I might be completely wrong and I might keep losing money for years and years. But my plan is to never sell because I don't really need this money at the same time. I have other income sources, right? And I think that's what's important is you only want to invest money that you can afford to lose, okay? And that's what I've been doing. So in terms of individual stocks, I personally recommend you guys to stick with an index fund and do something like a 3-fund portfolio like I've done. And if you just Google 3-fund portfolio, you can see the allocation and how to set it up. It's very, very simple. Very hands-off. It doesn't take anytime. You just buy those 3 funds consistently every single month, and you just forget about it, right? Basically. But I don't recommend investing into individual stocks, because that's when it gets a little more tricky, right? That's when the gambling aspect of stock market investing comes into play. However, I've done it just to kind of play with it. And what's interesting is it's actually done better than the index funds, and it was doing significantly better than the index funds for a long time. And now that the tech stocks are going down a lot, now it's matching the performance of the index funds, just because I have most of my money in index funds. So you can see I got Apple, Microsoft, Amazon, JP Morgan, Alphabet, which is Google, Wynn Resorts, Tesla, Facebook, Upwork. Okay, most of them are basically down 30 to 40%. Facebook is down 68%, but again, I only have a couple $1,000 just because I didn't want it to gamble with all of my money, right? Most of my money is in very safe index funds. So that's what I focus on. All right, so next is my crypto portfolio. So with crypto, I have $40,700 in my BlockFi account. And basically what I do is I just buy Bitcoin and Ethereum once in a while and just throw that into BlockFi. And it used to pay interest of around 4 to 6%. However, what happened recently is they stopped doing that only for US customers, just because US has a lot of regulations. So it kind of sucks for me. However, for now, that's the setup that I have. Now, the last one is my real estate investments. So if you look at my Instagram, which I will leave a link or my tag in the video description, and scroll back a little bit, there are some videos of my real estate ventures. I basically buy lands in Hawaii and then flip that for a higher price, or build tiny houses on it to increase value and flip it. So most of the sales were installment payments. You can see some of the tiny houses like this one. Pretty cool. And it's nice, but the thing is, it's a flip, right? So the payments, I do get paid every single month as it's an installment payment, but once they pay it off, then I stop getting paid. So it's not a complete pure passive income forever kind of thing. So I recently started investing into rental property. So I just purchased my first rental property. That one is $200,000. So I bought it for 200K. The market value is 200K. I think it's a little higher. And then it's paying me around $1,600 a month every single month. So that's the first actual cash flow deal that I've done. And I'm very excited to do more. But basically combining the value of that rental property, which is 200K, plus the amount of installment payments that I'm still expecting from those people, that's what I'm going to count as how much my real estate investments are worth. All right, so if you look at this slide here, so again, the rental property, I'm counting 200K because that's the market value. And then for the rest of the installment plan, people owe me around $50,000 or so. So that's the other value that I have. Combining that with all the stocks and crypto that I have, the total portfolio worth is $703,062.14. As of when I'm filming this, obviously it's going to be up and down, but it's going to be around here. So the cool thing about this, I talked about this in my last video too, but everything started with publishing. You know, if you're new to the channel, you don't know me, I make money publishing books on Amazon. It's a really, really cool business model. It's very beginner friendly, and it, you know, requires very low capital. And you can start generating income online. And that went so well for me that I started, you know, saving some money from the business and investing into stocks, real estate, crypto. And now it has gone up to this amount, which is crazy, right? Just in around 5-6 years. So, you know, publishing really is amazing. Whether you're in publishing or in different businesses, just keep making money and keep living frugally, because I am still very, very frugal. I don't spend money on anything that is not necessary, right? And I save a good chunk of that and I keep investing, and over time it just keeps compounding. Now the goal is to get to $1 million in invested assets. I do have the cash to do so, to be completely honest, but I don't want to put everything all at once just because the markets are a little uncertain right now. I do feel like it's going to drop a little bit more. It might go up. I have no idea. So what I want to do is dollar cost average, which is just basically saying that you put in the same amount of money every single day or every single week or every single month. Just putting money consistently for a period of time rather than dumping everything at once. So that is what I'm planning to do. I think I'm going to spread it out over a year so that I can get to the million after 1 year or so. I do want to put more in crypto. I'm talking to a friend over here in Bali and looking into more crypto opportunities. It sounds very, very interesting, but I'm never going to do more than 10% of my portfolio just because crypto is more volatile. And in terms of real estate, I do want to do more rental properties, but it's very important to only do deals if the numbers make sense. So I'm just waiting for, you know, those deals to pop up where the numbers make sense, because a lot of properties are very, very overpriced right now. Now, if you guys are new to investing, there is this thing called the 4% rule. And the 4% rule, it kind of applies to index funds investing in the stock market, but even with crypto and other investments, right? Because basically what the 4% rule is say you have $1 million in index funds, right? And the index funds on average grows 7 to 10% a year, okay? So it grows, let's say 7% a year. And inflation on average is 2% a year, although this year is much higher than that. But on average is 2% a year, right? So the index funds grows 7%, but inflation is 2%. So basically your gain is 5%. So if you take out 4 to 5% every single year, right, from your stocks by selling it and living off of it, your principal of that $1 million is not going to decrease because you're taking out 4 or 5% and also losing 2% in inflation, but the stocks are growing 7%. So it's like a plus minus zero thing happening, and that $1 million is not going down. It's not decreasing because it's like just doing this. It grows and then you take it out, and it grows and you take it out. So basically, if you have $1 million in index funds, you can live off of 40K a year in theory, okay? And that's a very, very, very conservative number. If you have real estate, crypto typically pays a little more in interest. So that 4% is more likely 6%, 7% if you do it right, if you invest in smart, you know, better paying assets, right? So that's 60K, 70K a year that you get paid. That's very close to pure passive income and fairly stable. Again, it all depends on the market. Nothing is 100% stable passive income, but you can get pretty close to it. And that is my initial goal. So from there, obviously I will keep building, but for now, I'm just trying to get to that first milestone. And that is the recap of my investment portfolio update. So thanks for watching. Hopefully you enjoyed this video. If you do like personal finance videos like this, let me know in the comments. And what I can do is, instead of jamming all the information in one video, which can get very, very confusing, and I only do this because I don't really talk about personal finance a lot. But if I start talking about personal finance more, then I can really separate, you know, bits of information per video, so everything is more easy to digest, right? So if you do want me to do that, let me know in the comments, and also let me know by liking the video so I know that people are liking this, so that I can make more videos like this. If you want to check out my publishing course, there's a link to that in the description, as well as all the tools and resources recommended also in the description below. Thanks for watching, and I'll see you guys in the next one.